Welcome back, folks. Another video on entry techniques on the lower time frames. Okay, so here we're looking at a 15-minute chart. Okay, and this here is the 9:15 candle. Opens at 9:15, ends at 9:30. Okay, 9:30 for me is the key time for the Asia session. I want to have an entry within the 9:30 to 9:45 candle. This candle here is your 9:30. Whoops, this down candle is your 9:30 to 9:45 candle. What does it do? It trades up into this fair value gap. What's order flow? At this point in time, order flow is bearish. So you are looking for the pump for the dump. Okay, so this entry on its own, let me grab a square. This entry on its own, okay, back up into this fair value gap right inside of this candle, which is a 9:30 to 9:45 candle, is enough. Okay, that is on the way up. Now you might not be comfortable with a entry to go short on the way up. Okay, so you can wait for the move down and push back up. Okay, time is what's important here. So you can wait for this push back up. Here we have taken a swing low, closed below that swing low with this candle. Okay, and then we have a pullback into where? Into this fair value gap. Okay, and that is basically the fair value gap produced as part of that displacement move down, right? Okay, so this move down is 3 down candles with displacement creating this fair value gap. Okay, where the market has pushed back up into at what time? Time is the key. That's happening in the second part of a new hour. Okay, the trades, in my experience, are going to be in that second hour. The best are going to be in the 30 minutes within that second hour, so 9:30. Okay, it's basically the 30 minutes within a new hour. Okay, so again, it's time. We look at time. Time here, this is 10:30. Okay, 30 minutes into a new hour, coming up into this fair value gap. Okay, so that could be a entry that you might be more comfortable with because you're seeing it's the order flow is bearish at this point in time. You're seeing swing lows broken, pullbacks into fair value gaps at the right time. Okay, let's talk about targets before I jump down to a 1-minute time frame. When you enter here, now this is the kind of entry I look for because I'm looking for the pump for the dump and at the right time. So when I see this pump up, I know that's my setup because I'm looking for an entry at that 9:30 to 9:45 and it's coming into a premium PD array, which is this fair value gap. Okay, so target on that trade, if you don't have a level, can simply be just back down to the swing low. That's almost 50 pips. That's all you need. Okay, even on this move, target from this entry, okay, down to its swing low is 35 pips. Or what you can do, you can look at where this, look at the price here, 25.20. Okay, that's a key institutional price point, 25.20. Okay, and what I would expect is a 100 pip move down to 25.10. Okay, that would be my expectation. So if you haven't entered here and you're entering here, from there down to 25.10, okay, is 70 pips. Okay, that would be my expectation because gold typically trades in boxes of 100 pips. Okay, so let me now jump down to a lower time frame such as 1 minute. Okay, again, it's all going to come down to time. Okay, where's my pump for the dump? There you go. There's my pump for the dump. I don't even have to look at the time. I know that's in that 9:15, 9:30 candle. Okay, now this here, right there, is a very, very key price behavior. Okay, I want you to pay attention to this because this tells you what's about to happen. Okay, you have these 2 down candles. They take out liquidity. Okay, well, this is the liquidity taken. Now, the market moves up through those 3 down candles. That is basically the bullish order block. Okay, so when price moves up and down, you'd expect price to continue moving higher. Okay, that's how retail ICT traders are seeing that price action. There's now such a thing as retail ICT traders because there's so many folks out there who are learning ICT, but they don't understand how to read price. Okay, order flow is bearish. Order flow is bearish. Okay, and so this is the fake move up, the pump for the dump because of time. We're expecting this fake move up at 9:30. Okay, so this, when this fails, that's your confirmation. Okay, that this is now bearish on the smaller time frame. That's your swing low that made the highest point on this chart on this day. Okay, and once you break that, that's a break in market structure. That is your bearish signature. Now I am already short from this level, right? Because I'm looking for this pump on a 15-minute chart. I'm looking for that pump up because I know that's my setup. I know what I need to see, right? Because I know what my setups are. That's why I always say you got to understand and learn what is your setup. What do you need to see at the right time to go short? I want to see this, a pump up at that 9:30 to 9:45 time period into a PD array. I'm short right there as this is pumping up, okay? But I'm giving you, you might not be comfortable taking an entry, expecting repricing lower as this is pumping up. For me, this is a pump for the dump, okay? So you can wait for the market to come back down and push back up into this bearish order block, okay? So that's your signature. This is also your bearish breaker, this 2 down candle, because that is swing low, okay, that made this high. Those down candles are The last down candle is basically your bearish breakout. We come back up into there at what time? This is the 10:30 candle. Again, 30 minutes within a new hour. You can short right there and expect repricing lower. Okay, your stops are going to be above at the highs. Okay, and you can see we are continuing to go down. Again, as I said, if that's your entry from that push up, then you can easily take your profits here at the swing low. Okay, or if you're expecting this to go down to that 100 pip move down to 25.10 from 25.20, then you could wait for a move down to there. But as I'm saying, all you're looking for is a scalp 50, 60 pips. Okay, so I hope that you can see what I'm showing you here. Okay, I see these on a 15-minute chart, but your entries can also be on a 1-minute chart, as I've shown you. This lesson is all about how to enter on the 1-minute time frame. Here we're getting the pump. Okay, here you might not be comfortable entering. I'm looking for this pump. I'm expecting that to be the pump for the dump because of time, because order flow is bearish at that point in time, okay, on a higher time frame on that particular day. And this is essentially right now at this point in time the high of Asia, okay. And so if you don't feel comfortable, then you can wait for the breaker structure, which is right there, as I've explained. Wait for price to push back up into that level at the right time. The new hour begins, and this is again the false move up. And halfway into that new hour, at this is all that 10:30 candle. If you go back to the 15-minute chart, you can see that that little pump up after taking out this swing low is at 10:30. It's a 10:30 to 10:45 candle. Okay, so 30 minutes within the new hour into another PDRA and down. Okay, so I hope that this video is useful. Again, this is another video just reinforcing the lessons of entry techniques on a 1-minute time frame. Okay, always trade in alignment with the higher time frame directional bias. I hope the video is useful. I want to talk with you in another video.